anytime you put money into the stock market or 401k, there is some level of risk involved, and you may have heard or maybe seen the ads for those new financial apps or cryptocurrencies, kind of like Bitcoin. But these also come with their own inherent risks. Certified financial planner Tony Drake from Drake & Associates joining us this morning to talk about better understanding and managing risk. Good morning to you, Tony.
Good morning.
So let's talk about some of those apps. What comes to mind is kind of like the Robinhood, the Stash, the Acorns. First off, right off the bat, good things, bad things.
Well, probably a little bit of both. It's really caused a big increase in especially the young generation and how much they're investing, especially since the COVID pandemic hit. So anytime we're saving more, investing more, that's going to be great for their future. Downside is it's really made it easy to trade, which can be a good thing, but some folks may be taking on more risk than they anticipated. When we have another downturn, they could be pretty shocked at how much they lose.
Okay, so let's talk about the risk when it comes to investing. What do people need to know about?
Market risk is probably what you're imagining. It's just the risk of losing in the market. And probably the biggest thing that folks don't understand is, investing is not emotional. And if you're invested at too high of a risk level and the market drops, you're going to be tempted to sell at the worst spot, and that's the bottom. So you want to understand your risk. I have a great complimentary tool at my website, wealthwisconsin.com, that'll help you understand your emotional risk, and then you can compare your portfolio to make sure those two are aligned. Having that alignment will avoid emotional decisions.
Interesting. Let's talk about Bitcoin. Bitcoin, obviously, it's that term that we've always heard about. A good way of making money, or is that a risk of its own?
Boy, I mean, hindsight's always 2020. If you invested in it years ago, you've made a ton of money in returns, but highly volatile. What that means is there's lots of ups and downs. So you have to understand what it is. It's a decentralized currency with some technology that allows for instant payments, but there's no government that backs it, no central bank that backs it. So it's really based on kind of the enthusiasm and support of those that use it. So if that were to go away, can really drop quickly. Recently, we saw some great examples. Was really dropping last week, and then this morning it's up about 10% already in one day. So lots of ups and downs when it comes to cryptocurrencies.
Interesting. Bitcoin, obviously not the only risky investment. What are some of the other ones that we should watch out for?
Well, I think so many folks are jumping into technology stocks, especially that younger generation, and lots of ups and downs there as well. Technology has done phenomenal lately because everybody's kind of locked down and at home and needs the technology to grow. As the economy opens up, we may see those returns shift to different sectors. So you want a dynamic portfolio, you want a retirement and income plan that you understand.
Okay, so diversity is what you're saying.
Yeah, having a diverse portfolio is really, really important. That means sometimes we might not see those really big returns, but it's going to help us offset some of those really tough losses that are hard to go through emotionally.
I gotcha. Tony, good tips as always. Thank you so much for joining us.
Thank you.